offered first. Highest in customer satisfaction among the big 5 retail banks. Banking can be this comfortable.
U.S. equity futures are pointing to a lower open on the markets after last week's softer than expected data from China. Fresh concerns, of course, about Greece. Diana Avigdor, she is Vice President and Head of Trading at Barometer Capital, joins us to help us wade through all of the news. It is a macro story these days. It's hard to avoid that. What happens to the fundamental, the bottom-up investor? What do they do in a market like this?
It's so true. A few months ago, we were talking about correlations, and that exactly speaks to what you're talking about. Correlations were very, very high, and we were saying that fundamental research did not help us because all stocks were moving in the same direction. Correlations are down now, and earnings season has been excellent. And, you know, this morning I was talking to traders and they said fear and loathing is what's going on this morning because after some great numbers, economic, well, not so great economic data, it's been a little sloppy. We can talk about that later. But you were looking at fundamental stocks and they were trading on their own merits. And it's kind of disappointing to see how a few headlines out of Europe, it's rearing its ugly head again, and we're trading macro again. And that's what's affecting markets. But volumes in Europe are about 80% of average daily volume. I think people wanted to see whether there was going to be some kind of breakout, and markets have been choosing not to break down for a long time before this finally hit. There was lots of negative headlines weeks before this. So finally we're catching up. I mean, European headlines are not to be discounted.
And why do you think that is? Because I'm fascinated by that, because that's something that struck me. I feel like, look, the economic fundamentals have been weak for a while, at least that's my perspective, and yet it seemed for several months, anytime we had bad news, we got a little bit of a downturn. Anytime we had good news, we had a big jump up. Why was the market thinking that way, and why does it now seem to have turned?
Earnings have been good. Economic data in the U.S., which is arguably what has been repairing first and best, has been okay. Yes, it has disappointed on the surprise index. So the expectations were higher and it was coming in lower. So people, and I look at this too, the economic surprise index is really pushing down because the surprises have been negative. But you looked at the payroll number, for example, 2 weeks ago. It was okay number. The numbers were okay, but it disappointed estimates. Still speaks to a 2.5% GDP growth, which is not bad. Economic data out of Europe has been horrific. So markets have decoupled. You've had U.S. up here and European markets were down here. How long can this decouple? And with Greece, you know, Greece leaving the euro, this is going to rear its head over and over and over again. And this is the second time it's doing it. People are disappointed that it's not getting fixed. This time around, I think something needs to be fixed as opposed to just a bridge over solution.
You think that growth is essential for them to grow their way out of their problems in Europe. A lot of analysts, traders think that growth is necessary. Why are the governments sticking so hard to the cuts right now?
Well, but they have no choice. In order for history not to repeat itself, they have to have austerity and at the same time print their way through to growth. This is what all central governments are doing. The Bernanke put, what's going to be the strike price of that? One guy at Morgan Stanley asking. Same thing, backstop in Europe. Everywhere, printing money in order to help the economy come back to a growth path, because that's the only way they're able to fix the situation. And if Greece leaves, you know, it's a small economy, it's a small market. If this will create the framework for the exit, maybe the anxiety level actually will decrease. It may be a solution.
I want to ask you about JP Morgan. You're the head of trading of a shop that's a little bit smaller than JP Morgan. But fundamentally, at the end of the day, trading is trading. I just wonder if you have any thoughts on this huge loss at JP Morgan, which is a trading loss in a situation where the market turned against them.
Right. So do we really know what was going on, what it is? The call is that they were hedging. The hedge was through some derivative instruments on high yield indices. This gets obscure, right? The index itself, from a high yield perspective, the pricing of it is very fluid. In high yield world, this is an over-the-counter market. The pricing ranges are high. You don't know what kind of leverage was used on this. This did not seem like a plain vanilla. But to people that are trading in this environment, to them, it's okay. They do this all the time. But the pricing gets blown out. So now what happens, given that it's a thin market and in a liquid market and a manually priced market, you know, who's going to, now it's a pricing game. Now it's a mark-to-market game. Now, can they get out? Is it $2 billion? Or is it, some traders were talking last week.
$100 billion.
Yeah.
Does this sound
by
to you?
the time they come out of it.
Does this sound to you like it was a hedge strategy or a speculative strategy? I know it's hard to draw that line.
I know. I can't believe that in today's reality, given J.P. Morgan and Jamie Dimon and what he's talking about in the past, I cannot believe that this was a trade put on in neglect. I do think that trades do go offside very quickly, especially in this market, and you know, whether it was at fault, I don't think there was any fraud involved in this. I don't think that there was any lack of intelligence involved in this. This is just a trade that's gone wrong. It happens all the time.
But do you think of it as a hedge, or do you think of it as a speculation?
You know, they thought it's a hedge.
That's how they've termed
That's
it.
That's
what they say.
And correlation, but correlations in this market also change all the time. We look at markets are so interlocked right now. Things that affected us, you know, a year ago are less applicable, and more other things affect us now. Like equity markets are more affected by currencies. Before they were more affected by some other metric. I think the correlations when they put on these hedges, you do the math. It's all so mathematical. And then the correlation breaks down on you, and then things change.
And it can change so fast and so deep.
Yeah, yeah, exactly.
So what do you do as an investor at this stage? Do you think, okay, they can handle it as a company, they can absorb it? Do you not worry too much about it, or do you worry and pull money back? You
don't need to be in stocks that have stories like this around them. Just like when RIM hit the tape with issues of market share, J.P. Morgan now, investors have such a wide array of things to invest in. You really don't have to touch these things until you have clarity. You really don't need to pick bottoms in stocks. It's okay if you just buy on the way up on something that you are more sure of. The REIT index, for example, hit a new high on Friday, the XRE. There is flight to safety. This is with us to stay, this yield, thirst for yield, this dividend desire. People want some security. Those that are in equity markets still, that haven't been, they're not fearful, have not been fearful to come back, they want this safety now. J.P. Morgan, can it recover? It's going to depend on what happens to this trade that has gone awry, and you know, if it keeps growing, and we have regulation coming up in front of us too, and this is just going to force it to be a little more stringent.
But the volatility is here to stay, you think?
Volatility, I think, is here to stay. Regulation, we have to muddle our way through this. This is also very hairy because market structure has changed, and regulators are grappling with this. Nobody really understands the true implications of multiple markets and the HFTs and the derivatives and proprietary trading. What's proprietary trading? Do I, a buy-side trader, going to a bank and they put me up on a trade because that's what they do for liquidity? Is that proprietary, or is that client service? So there's all kinds of issues around regulation, and we may go to extremes and then pull back just like it always happens.
Just the elastic band. Okay, yeah. Diana, we'll have to leave it there. Very interesting setup on a Monday, isn't it?
Thank you.
Thanks for joining us. That's Diana Avigdor. She is Vice President and Head of Trading at Barometer Capital. Of course, she joined us here in the studio. Okay, we take a very short break, come back with markets and web question of the day.
A historic